Welcome to today's edition of Toggle's Daily Video Insights. My name is Jan. For those of you who are joining us for the first time, I'm one of the co-founders of Toggle, and today, like every other market trading day, we're going to take a deeper dive into one of the insights generated by Toggle across thousands of US equities on a daily basis. If you'd like to see more of these, please subscribe to our YouTube channel or else go to toggle.global and you can also test drive the Toggle system itself. The focus today is going to be on Alibaba. As you can see here, actually, Toggle has a range of active positive signals on Alibaba. Some of them have come pretty close to being stopped up, but haven't yet. So we still remain in this relatively positive phase. And the most recent one was basically based right here, was generated just now, which suggests also that the entry point is really compelling. And so we're going to take a look at this because this was a much shorter term force that was identified by Toggle. It is in fact inspired by another stock, Qiwi, that has just recently had an attractive entry point as well. Historically, when that stock rallied, Alibaba did quite well as well. So Toggle reckons that you could see about 6% upside in Alibaba over the next month, just based on this cross asset comparison, in addition to all of these other forces that we already looked at. There have been 11 occasions where you've had this pairing between these two stocks, and the outcome has typically resulted in an upside rally for Alibaba. Now, the starting price here is 212.54. You want to see the price stay within this confidence interval that represents the range of past outcomes from those previous 11 episodes. The target would be somewhere around 225.77. Again, this is about a 6% rally over the next month or so. And if, however, the stock were to drop lower below 205.92, that calls for a serious reassessment of whether or not this is still the relevant driving force for the stock price. And it's typically the place where it's worth potentially considering also removing the stock from your portfolio. Now, why it might move? Well, this is basically what you can see here. When you've had a large move in Qiwi, as we've seen here, and here, typically that was followed, with the rare exception, by a large move in Alibaba subsequently. So it's been actually quite a good indicator of what might be going on in the sector and in Baba in particular. Looking at the past performance in particular, we can also take a look at what the performance would have been had you invested $1 and then reinvested it in each of these past 11 episodes. And actually the outcome would have been quite good. This is about $2.50 of profit that you would have earned on that. So quite a good return on investment. Now, interesting to have, or pay attention to this, which is the scattering of returns definitely confirms that there could be potentially quite a bit more upside than just 6%. However, the downside, occasionally there were some returns that reached almost a negative 10%. So the risk reward here is much more barbelled, which means that the level at which you decide that this isn't working is very important. You really need to stick with it. Downside risk management is crucial to being able to monetize and hold on and profitably trade some of these ideas. So much for Alibaba today. In the daily brief, we also discuss in particular what should you be looking at if you worry about inflation and if you want to see how investors might be reacting to fears of inflation at Fed tightening. Should already be in your mailboxes if you subscribe to it. If you don't, go to toggle.global and you can subscribe there. Thank you for your attention. Have a very nice weekend, and we'll see you again on Monday.